Welcome back to Vantage. We are kicking off 2024 with a visit to the emerging markets. I thought it'd be a great time to start the year thinking about where you might see some growth. We hear about some fascinating megatrends in places like Brazil, Vietnam. Love this manager in terms of his experience. Let's go take a look. Welcome back to Vantage. We are focusing on the emerging markets. I am delighted to have Charles Jillings here from Utilico Emerging Markets Trust. Charles, if you could introduce to our audience the trust and your respective role in the trust, including just some broad indicators in terms of where it's invested and the sectors it focuses on.
With pleasure, and thank you for having me this morning. So Utilico Emerging Markets, we established back in 2005 in response to a lot of investor interest back in that time, looking for diversity within the emerging markets. We took a route of focusing on emerging markets, focusing on utilities and infrastructure, because that's where our, if you want, knowledge and deep differential lies. So what does that mean? It means we focus in on things like power, water and gas, transmission, generation. We focus in on infrastructure, supports, airports, toll roads, and we focus in on communications. So back then mobile phones, but these days much more data centers. And we're looking for, if you want, long-term operational assets that we can build and understand, and then put into the investment portfolio and achieve returns over the longer term that we believe investors are looking for. So, my internal target return is over 10% at the moment. We're running a bit behind, but that's the focus.
Okay, and then in terms of the countries that you're most exposed to, could you give us a quick overlay of that?
So quick overlay at the moment, Brazil, 24%. Next up would be China, India, but it does vary. We're bottom-up investors at the end of the day. We don't buy the index and we don't buy countries.
No, just interested in the exposure. Okay, so, for an investor, what is the appeal of emerging markets, global infrastructure? Why that class of asset effectively over other things?
So I think if you look at the drivers in the emerging markets, there are the obvious urbanization, the obvious middle class, and the demands that they are expecting. So they're expecting better transport, better infrastructure, better communications. And our, if you want, assets are meeting that rising demand, and that demand will continue for the next decade. I think urbanization is still a big trend. I think there's, we've identified 4 other trends which we believe, again, are here for the next decade, and they revolve around energy transition, global trade, social infrastructure, and digital infrastructure. And I can unpack that a bit more.
If you could, because I think we'd like to understand, so if you think about sort of megatrends, there tend to be sort of, 10, 20-year cycles. And it'd just be interesting to understand where you think how mature each of those trends are and where you are in the growth cycle with them. So if you run through the 4 and just sort of touch on what's driving that and how mature they are.
So I think before touching on them, just to touch on, I think governments today and for some time understand to unpack to release the opportunity in their economies, they need better infrastructure. And so you've seen governments establish really good frameworks and outlook for the next 10 to 20 years. So I'm pretty convinced that there is support from, if you want, government. But energy transition, as we know, everybody is seeking a higher level of renewables. The emerging markets are no different. And that presents them with the same challenges that the developed markets have got. If you looked at Brazil, a lot of their renewables, say wind, is north in geography, but all the industrial capacity, all the population is south. So they need added infrastructure. And that's underway, and they have annual awards, and there's a significant visibility on what's coming, what's needed, and that'll continue for the next decade. I think the other element that emerging markets are also focused on is energy resilience. So just making sure that, if you want, the energy mix can support the industries that they have, and that those two drivers will be here for some time. Second trend will be digital infrastructure, and the emerging markets are definitely running behind the developed markets, but the growth rate is bottom left, top right. The compound growth around 20-25%. The thing that's super exciting actually is AI. AI, in order to, if you want, access the database and manipulate it and get the benefits from it, everybody needs to get into the cloud. So there's a real driver for things like data centers, connections. And again, I could see that trend running for some time. Automated cars and all of these uses will need a lot of infrastructure behind them, including power. So digital, I think, is a driver for some time. Looking at social, a lot of these countries are behind on, if you want, the infrastructure for social goods. So things like waste and treatment of water, but also just the expansion of airports. If you look to places like Mexico, at the moment, a lot of people still travel by bus. And journeys are long, they are somewhat arduous because of the mountainous terrain, and therefore the growth of airports and low-cost airlines has been a real social good. If I look at global trade, yes, the world is slowing, although not stopping. It's still, has strong growth dynamics. But much more importantly, I think that the friction between China and the US is definitely resulting in China plus one, China plus two, and that's companies relocating out, or not relocating, taking their next marginal decision to establish a factory in Vietnam or India. And that driver, I think, will run for some time. There's also a driver out of COVID where businesses looked at supply chains and said, we're too reliant, we need more resilience, and we need to shorten them. So we're seeing, and it's called nearshoring, we're seeing a lot of that happening. So again, places like Mexico being a direct beneficiary.
So, I mean, and, you've identified, I guess, the megatrends, and I could see how those lead to some, exciting growth rates. How do you express that in the actual portfolio? Could you talk to me about, some of the companies that give you exposure to these trends?
With pleasure. So in Brazil, we have an investment in a company called Edison, which is, we've increased significantly about 12 months ago. And they are about the waste and waste treatment in Brazil. And 4 years ago, I think 2020, the Brazilian government brought in a new law which said all waste needed to be treated. Up to then, a lot of municipalities dumped waste, and it resulted in contamination. It resulted in poor outcomes socially. They brought a law in which now requires waste to be treated at very high standards. So that's a good thing. Edison is a listed company, relatively small but growing quickly. But the market is fragmented, so that's exciting. But the real opportunity probably lies in not just taking in the waste, but then sorting it, capturing the methane, selling the methane back, And also, if you want, selling green credits, because they are definitely cleaning up the environment. So we see that company as having a number of growth drivers. It can expand the number of waste sites in its portfolio. It can then take them through that journey. And, that's something that should grow for almost the next 10 years. So that's one example that I think demonstrates the benefit.
So if you, let's say you've identified one of these companies, you've got your megatrends, you see something that sort of comes onto the radar. Just what is the process that you undertake to give yourself comfort that, you're investing into the thing? Do you get onto the ground? Do you have a team of people? I'm just curious as to, how do you run that with your due diligence process?
So I have a fabulous team underneath me of real experts in their field. So I have John Grucock, who looks after the utilities, Jacqueline Brewer, who looks after infrastructure, and Mark LaBelle, who looks after communications. They have over 10 years experience in working with me. I think as bottom-up investors, our number one premise ultimately is we want to meet the management, we want to see the asset. So we do travel. In March, we usually go to Latin America. We've just been to Asia, and the team will break up. We all understand the drivers for across the entire portfolio. So between us on this last trip, I went to China, spent an amount of time going around inside China to try and understand what's happening with their economy. We went to Vietnam, took our board with us. And if you want, we also covered off across the team, Philippines, Korea, Hong Kong, and Indonesia and Thailand. So we came back with, I think, a good oversight of all of those economies. We'll visit all the companies that are in our portfolio and companies that have been in our portfolio to understand, if you want, where they are on their journey and should they go back in. We'll meet other companies, competitors, and understand from them how they're seeing the market evolve or develop. So a lot of due diligence, I think. And if you looked at our top 10, we've been there for decades. You identify a good asset, good management team, they can deliver.
So the portfolio is constructed. What risk management measures do you have to avoid over concentration, over exposure to, should a country suddenly have a devaluation, etc.? So how do you manage the portfolio with that, on that side?
So top down, we have, I think, a framework that we discuss around, and as some countries are just challenging, we found over the decades. Russia was one. We've only ever had one investment there over time, and it's taught me why you don't want further investments in Russia. So we have a top-down approach. I would note over 90% of our investments are listed, because I just don't have the management team to put in on the ground, say, in Vietnam. And over 95% are operational. So we can see, if you want, a runway, and we can understand management's approach. We can see the information. We can properly build models. Trying to come back to your question, as a bottom-up investor, the portfolio does move. I think in terms of individual concentration, something over 5% usually gets reduced in size, just so that, if you want, there are no real shocks to the portfolio. In terms of country, Brazil's up at 24%. You can imagine there's a lot of discussion around, is Brazil resilient? Do we have the confidence? And I think at the moment we feel Brazil is extremely strongly placed. I think our strength almost is we've got to look through the noise. All political leaders are appealing to an electorate, and on occasion the noise can drown out, I think, the fundamentals. But if you look at the Brazilian fundamentals, they're particularly strong.
Yeah, okay. So a great track record. If I look at the sort of 1, 3, and sort of 5-year performance as we speak in December, curious also about, you've got a track record of growing your dividend. Is there a formal dividend policy in place at the trust?
So we're after a total return, but because of the nature of the investments we're making, because they are, if you want, operational, all of them pretty much generate a cash flow. Some of them can be directing it into new investments, so an airport terminal, or add a data center. But over 80% pay a dividend, and it's a feature. It's the way I put it. I don't think we invest for it. We are conscious that a lot of our underlying shareholders are retail or wealth managers, and they want confidence about dividends. So my observation would be we have a covered dividend. We had covered dividend all through COVID. So I think that was a unique outcome. And looking forward, I would expect dividends to rise and reflect some of the return to shareholders.
Okay, thank you. A lot of people watch these partly to educate themselves, and as I've got an experienced manager in front of me. I mean, cast yourself back to, I guess, you started your journey. If you've got a young investment professional who's got an interest in emerging markets, based on what you know today, I mean, what would your recommendations be to develop their investment knowledge?
I think the more exposure you can get on the ground to the emerging markets, the better you will be. Go out and have a look. Have an inquiring mind. And if I just make some broad observations, we went to Latin America in March, and I went to Mexico, Chile, and Brazil. I didn't use any cash. None of the team used any cash. And all that's telling me is actually those economies have shifted to a digital footprint. And that could be, the taxi driver all the way through. And that's exciting because you can then look at it and say, there's the journey they're on is definitely unlocking opportunities, but have an inquiring mind, get out. I think try and understand the dynamic, try and understand the environment. Don't believe everything that you read. And I think my one piece of advice would be, if it's too good to be true, it usually is. Stick to the knitting, I think, is the answer.
Charles, it's been a huge pleasure having you on. And we don't get a lot of emerging market fund managers on, so really interesting to hear about the dynamics you're seeing, particularly in some of the countries that Brazil, Vietnam, and I can see how when we read the stories of the political stories today, how that is sort of translating into actually the business activity that you're seeing on the ground. Thank you for coming on the show. We look forward to seeing your progress over the coming year, and I hope we can check in with you in 2024 and see how you've developed.
With pleasure. I'm cautiously optimistic.
Thank you.
Thank you.